You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mike Yahoo. Hey, what's up, Market Moose? Mike from The Moose on the Loose. I hope you are doing well today. Cryptocurrencies are on fire, my friends, right? And no, I'm not going to tell you to invest in crypto. I'm not going to tell you to not to invest, but rather what to do with your cryptocurrencies if you have made a big gain. I had that conversation with my friend, and what's interesting in this question was now that all my cryptocurrency stuff has boom, literally. And just for fun, if you look at the Bitcoin over the past 12 months, it has increased by like 163%, which is kind of crazy. So more than doubled within like a year. So the question is not really about cryptocurrency here, but rather about what do I do now that my asset allocation is completely off? So my friend is a pretty solid investor. He knows what he's doing, and he's following his own strategy. And a part of his strategy is, of course, having an asset allocation. So he knows how much he wants to invest in cryptocurrencies, like a percentage of his portfolio, how much he has like in stocks or in ETF and so on. So he knows all this, and he has managing this like pretty clearly. So now the problem comes where the crypto in his portfolio has obviously jumped big time, and now it's a lot bigger than its current asset allocation. So I don't know the numbers, but let's say that he wanted to have like maximum 10% in crypto, and now he's at 20. So now what's the deal, right? So of course I told him like, well, dude, the easy answer to this is to approach it as I would approach any of my big winners in my portfolio, regardless if it's crypto or if it's a stock. It's just the point of, well, establish the maximum exposure to risk to one investment decision. So in my side, what I did is I determined that I am comfortable losing about 5% of my entire portfolio on a bad idea. So losing 5% means that roughly the worst that could happen on any of my company that I have would be to drop suddenly by 50% before I make any movement, any trade. So losing 50% of an asset, if I'm willing to lose 5% of everything, that means that my maximum exposure would be 10. That's my personal rule. Like for somebody else, it could be 15, somebody else could be 20. It doesn't really matter. What matters is to have a clear rule here. So whenever I have Apple, Microsoft, or Alimentation Couche-Tard, that was more than 10% on a specific year. At the end of that year, if it was still above 10%, I would sell like 2-3%, just like a little bit more to bring it back to around 8% of my portfolio. Why doing that? Well, just trimming, cashing on the profit on a strong winner, making sure that I rebalance my portfolio, and also making sure that what happens if this company starts to go sideways, they make bad decisions, and in the end, it was not that great of an investment idea, and then the stock price goes back down by 50%, well, I would lose a lot of money. So I decided to cap that exposure to 10%. That allows me to keep it simple, to not ask myself a question like, well, is Alimentation Couche-Tard a good stock or not? Well, I don't have to think about that, because as soon as it's like 11 or 12% at the end of the year, I sell a few percentage and then I go back to 8 and then I'm happy. And then most of the time it will rebalance by itself, but some other times you need to give it a little bit bump. And this is where you're a little bit of a help, and this is where you sell a few shares. Going back to my friend, he followed up with another question, which I found very interesting. And he's like, yeah, but I don't want to reallocate my money right now, even if I'm at, let's say, 20% of my portfolio, because I don't see any other asset that could be more interesting than crypto. So I still want to ride this wave. And then I thought he was going a little bit outside of the rule that I offered, where you just have to stop debating whether or not crypto is a good investment, but focusing on your exposure to risk. So then I offered him another type of solution. I'm like, okay, so you believe that crypto is like really, really important right now, and it's going to be a very strong asset in your portfolio. That's fine. And the point is not to argue about that fact or not. Completely not. It's like, that's like, you do you, I do me, and that's the way it goes, right? So if you believe in something, you have to invest with high conviction. So what's perfect is following a strategy. So ask him, okay, so imagine that you have 98% of your portfolio in cryptocurrencies. Like, let's go to the other extreme. How would you feel about that? And he was like, he freaked out. He's like, no, man, it's impossible. I would never do that, because then I know it's like way too volatile and this and that. And then he started to line up all the bad sides of investing in crypto. And then I found interesting. I'm like, okay, so 98% obviously was definitely extreme, and you will not go there. But at the same time, that shows you that you have a limit. You just haven't found it yet. So now just work backward. So start at 98, go back to 90, maybe 80, and then go down until you feel more comfortable. So then maybe is ideal allocation in cryptocurrencies like 20%, and it was not 10, and that's fine. So then what to do until then? So you're at 20%, your maximum is roughly 20%. If it was a company or an ETF, well, then I would probably just rebalance and trim on profit at the end of the year, like only once a year, because it doesn't fluctuate that much. And at one point, it doesn't matter. Like, it's not a good idea to start selling and buying all the time, right? You don't want to duplicate your trades and increase your commission fees and having your eyes like stuck to your computer all the time. So for a stock, that's how I would approach it. So every year I do that. Only once a year where I trim. The rest of the year, I just think a mental note. Okay, so Apple this year is having an amazing year. It's going above 10%. So I'm going to wait until the end of the year, and then I'm going to trade. But for crypto, it's a bit different because it's highly, did I say highly? Volatile. So of course, waiting for 12 months would probably not be a good idea. So I would do it every quarter. So you do it quarterly. You know that like the first of each quarter, like 1st of July, and then 3 months later, and so on, whatever, you just pick up dates. The key again is just to have a specific time with a specific rule. So then you don't have to ask yourself. So if my friend on July 1st, he looks at his crypto portfolio and now it's like at 25%, well, then there you go. You sell 5%. And if it's going down to 15% of his portfolio, well, then it's fine. You lost a little bit, but I mean, you knew that your portfolio will go between 10 to 20% exposure to crypto all the time, and that is fine as well. So again, going back to simple rules, very clear, very easy to follow, that do not implicate a debate about whether or not crypto is a good asset to hold right now, or a stock right now. Like, what's the short-term possibilities of seeing it going up or going down? You're going to go crazy asking yourself those questions, of course. If you want to have more ideas like this, more strategies, more tips, I will be hosting a free webinar next week. A free webinar on the buying struggle and the selling struggle. So few tricks to know when to buy and how to buy, and a few tricks to know when to sell and how to sell, to do that with conviction, to not double guessing your decisions. To register for the webinar, just go on moosemarkets.com/webinar, moosemarkets.com/webinar. It will be also in the link description note. So super easy, moosemarkets.com/webinar. In the webinar, it's 100% free. It's on May 30th on Thursday, 1 p.m. Eastern time. If you cannot make it for the live event, no worries. Just register. You're going to receive the replay for free as well. So you just have to register, and then you're going to be up for a good time with me. And on top of that, we're going to share some strategies about how to buy with conviction and how to sell with conviction, with having those clear, simple rules to follow and avoid that darn paralysis by analysis. All right, Moose, that's enough for today. I hope that I've helped you invest with a little bit more conviction today, and we're going to talk again on Thursday. Until then, don't forget to stay invested.
Hey, welcome to the disclaimer. If you're listening to The Moose and the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy the show and do your due diligence after it.